Welcome to Trading Lounge and the US indices for Thursday, May the 5th, and starting with the S&P 500 here. Yesterday we looked at bullish counts and bearish counts, and I think we'll do the same today, and we'll also drill into that particular move to the upside there. And on this 3-day chart here, it's just on 3 days, we can see the stochastics coming down here quite nicely for a lift off. And we can count, as we mentioned yesterday, we can count 5 waves in this move. So we'll have a look at this move here. We'll also have a look at this little move to the upside. We also looked at the S&P 400, the mid cap, yesterday as well. And that also had, well, slightly sort of complicated correction here, but I made it as simple as I can with an A and a B and 5 waves for the C for the A, and then an A and a B and a C for the B, and then 1 and 2 and 3 and 4 and 5. You could probably count that a bit differently there as well. But yesterday we looked at this being the low, and that we're seeing a nice strong move up here. So one of the things here, of course, when we look at these moves to the upside here, is that currently we've got 3 waves up. So really, to confirm, to make it to be sure, so to speak, we would need to see, just in a nutshell, we'll have to refine this a little bit, we'll need to see 5 waves up. And don't think that you're missing too much, because if we do get 5 waves up, well, then we're going to get a retracement. Now this retracement could come down 40%, or it could come down 60%, or in that range there. But if we do have a clear 5 waves here, then we'll be going long at this point here. Of course, day traders can get in and scalp to their heart's content. But if we only end up with 3 waves to this point, then we've got an issue at that point, haven't we, obviously? And a lot of times when the Feds put news out that, or just not the Feds, any sort of news really, we can see it sort of go up for the day, and then the next day nobody else comes in and buys it, and it starts to fade and then move down from that point. And we're talking about that with stocks today. So it's not over until the big lady sings, yeah, so we need to build evidence for either case, being bearish or bullish, and that's what we'll be doing over the next session or two. So we also looked at the Russell too, but I won't bring that up right now in terms of having a low in place yesterday. Now this we have to look at the bearish case, so let's just do that. I'm not sure what chart I put them on, but we'll go in and have a look. Okay, this is one of them here. This has been a slight adjustment. So in this case, we can count 5 waves down. So we'd need to look at an A wave here, a B wave here, and a C wave down here, looking at the bigger picture as a W, X, and Y here as an ABC pattern. I think it's valid. I don't think we could chuck it out just yet. There's a lot of supply coming back up into these levels here. There's probably a different way to count this down here because of this little consolidation in here. It kind of opens a bit of a can of worms, so to speak. So we could also, bit of a long shot. I know you could start chucking stuff at me for this one, but down for 1 and back for 2, down for 1 and back for 2 here. Possible. So yeah, we'll just keep an eye on that as well, but we won't go into a lot of detail here because today we really want to focus on spending our time just observe it, just looking at this, counting this here, having a good look at this, pulling it apart and understanding it a little bit in terms of, well, everybody's bullish. It's a 2-day thing here, 2-day chart here. Knows nothing special about 1 day, 2 day, or 3 days. But it's also, lining up down here as well for the stochastics. So, and we also got quite good volume on that. If we just go back to the 1 day, was it the 1 day chart? Yeah. So this is the 1 day chart. So it's been dribbling along the bottom here for, it's been flatlining here. But they do that when they take out old lows. That's what sort of occurs at these points. But just going to the SPX here. This is a daily chart here. Don't worry about this count either. But in this, we looked at these little 2 days in here, and we see obviously I was waiting for the Fed. There wasn't much volume. In fact, there was, decreasing volume here. But now we've got Now we've got, got increased volume with the bar up, so that's a bullish sign. So let's see what happens tomorrow. Let's see what occurs tomorrow. Let's see if there's any, for a trend to be a trend, we need increasing volume. So let's see if we get increasing volume tomorrow, or we get less volume. So that will be something interesting to have a look at that point. So we'll keep an eye on the volume. And so based on we'll look at the bullish side because everybody's thinking bullish. So just coming back here to this particular pattern here with the ABC, looking at a low being in. So let's see what it takes to count 5 waves up here to help confirm this to be bullish. That's really what we want to look at. So yesterday we looked at the 2-hour chart to start with. So yesterday we looked down from B down to C, and we counted down as 1 and 2 and 3, which is 1, 2, 3, 4, 5, which is acceptable, and 4 here, and 1, 2, 3, 4, 5. So the moves to the downside were diminishing. I think that's kind of fine, really, when we're coming into large numbers, because large numbers tend to do that. They can skew the market quite a lot. So the question is all about this particular move in here for this. So let's just go into the 2K tick here. I've just been looking at it a little bit, so let's just focus on that, and let's see what it takes to make a bull market at this particular point in time. So as I mentioned, that we really want to see, to be a bull market, we really want to see 1, 2, well, in this case we'll take it up to 3, 4 and 5 here for this, going a little bit higher than I thought, because yesterday we did the same thing, but we're doing it across the 4, 3, and then an A and a B and a C. I mean, in a nutshell, we want to see 5 clear waves here, and if it's nice and clear, that means we can buy on the pullback, because it should be a 5, 3, 5 structure, and we can buy right on the 5th wave low coming into this space here, based on that we totally understand that that's 5 waves. If we don't totally understand it's 5 waves and it's a little bit iffy and so on, well then we'll have to, as this is the A wave, the B wave and the C wave here, we'll have to go long above the B wave here. So we'll just be, so we're sure, because if it looks like it's a corrective wave up, or we're not sure, then this could be down for 1, back for 2, down for 1, back for 2 here, and then down again. So buying on the low here wasn't such a good idea after all, Pete, So we need to be sort of safe as we can. We're not talking about scalping, we're talking about moving in for the longer haul. So one of the first things here is that obviously this particular chart here takes the futures market into consideration. So I mean, really I can count 5 waves in this little move here, with 1 and 2 and 3 and 4 and 5. So what do we do with the rest of this here? So then I look at the cash market, the SPX. If I can just go back to that for a moment over here, and we'll just go to 1 minute, we'll just drill into this and just have a little look at its move to the upside here, which is a little bit cleaner here. So from the low, is that right, or are we going further down? Yeah, I was going to say that wasn't quite right. In this case here, if we look at this as wave 1 here, with an ABC for wave 2 coming to this point, so that's 5 waves here. The B wave, 1, 2, 3, 4, 5. So as an A wave, a B wave and a C wave. So we could look at this as a truncated 5th wave here. So we could look at this as, I mean, when I look at this here, I suppose we could build a case. I like to sort of drill in and find these little things. So it's probably 1 and 2 here, and 1 and 2 here, and then the 3rd, 4th and 5th for that 3rd. So that really gives me 5 waves from this point to, whoops daisy, get this horizontal line working, from there to there. So that's 5 waves to there. Now this this low is below this low is below that one, so we'd have to look at that as 1, 2, 3, 4, 5. So that would be this would be 1, get this thing working. 1 and 2 here, and then we just counted 3 to there, so this has got to be 4 to here. That's 1, 2, 3, 4, 5. So we could look at that as wave 1. Now I'm stuck with that. Get that squashed in. So 1. Okay, so let's just go back again. So I've got, I mean, it's in the detail. I don't know if that's the devil or God in the detail, but so that would be 3, 4 here. Then we'd have to look at that as 1 and an A and a B and a C for 2 and 3 and 4 and some sort of truncated 5th wave here, and then the A and then the B over there, and then the C wave there. So on the cash market, it counts a little bit better as an ABC pattern to here. So I thought it's worth pointing out. That's just and then we can look at this as wave 1 here and 2 here, and then we can go up for the 3rd wave here, you know. So we can get away with looking at it as wave 1 to this point. I'm just saying, that's all, because here it looks it's like a bit howdy-doody here, you know. So, but we just went through that and we put wave 1 there on that. So yeah, I mean, that's what you have to do. You have to sort of look around and check on things and compare things, and, you know, and then at the end be a little bit philosophical about it, you know. But a hardcore Elliott would go, oh, okay, well, perhaps that's wave 1 over here on the futures, and then we've got wave 1 here with an ABC for 2 here. So that's possible. We could consider that as well. So we could do that. In fact, we will do that. We'll just put that there, but I don't think it's the case, but it'll come out in the wash a little bit later. And yeah, so we're thinking rightio. So we've got let's just go through this a little bit. So we've got this as this line here. I'll go between the two of them here, but we've got wave 1 there, so that's the length of wave 1 there. So to get wave 3, we can take that and we can put it on wave 2 low here, and that would put this green wave 3 up here at the 161 area, which is about right. So we can look at that as 1 and 2 and 3, and this can pull back 38.2%, and then we can have wave 5 up here, somewhere up there, and then we can have wave 4 coming into play, and then wave 5. So the extension will be in wave 3, so wave 5 and wave 1 will be roughly the same, so to speak. So that will bring us up into that space, so that's good. And we can just shorten that a little bit. That will give us wave 1 at that point. So this is what we're looking for if we're going to be bullish, you know. And then the wave 2 pullback, if we take that there, that would bring us back into this space. We don't need that now. So that's 50-60%. Doesn't have to pull back that far, but that's just where we stick the flag in to make a start. Always count the structure. So then we've got this sort of A, B and C wave to come into play here somewhere. So an A wave, a B wave, depending on the higher that goes, the less it will come down here basically. But if it does the 61.8%, we could end up with something like this. So if it's going to be bullish, that's what it's going to be like. And if we can count those 5 waves there, you know, looking reasonably good, and, you know, we'll compare the cash market and the, you know, and the NASDAQ and, you know, all the sort of markets to bring them into sort of play, then we can buy in this box here. So when you think about it, you know, you might be FOMOing from the, you know, frothing from the mouth here, but in fact, you don't need to, because we can pick it back up here anyway, you know. And if you buy up here, as new players do, then because they see that and that's what they think they're buying, they think they're going to get more of that. But you always get the opposite of what you're looking at. So in the markets anyway. Probably in marriage as well when you start choosing. I'm very happy with my wife. She's a beauty. Anyway, I can get rid of this. And yeah, so look, that's it. So if we get that, then I'm happy to be bullish, and you know, it takes all the sort of iffiness and woulda, coulda, shoulda out of the situation, and that's what we'll be doing. And yeah, but we need that 5-wave structure there. You know, it may be a bit shorter, you know, maybe a bit longer. I don't know. We'll adjust it along as we go. Okay, so in a nutshell, that's what we're looking at. I think that's pretty good. And yeah, so yeah, but no, but okay. So I'll just push this to the side because we've got to go through the other ones. So this would be a corrective, the triple Q here. We could count it as 5 waves as well, but in this case we'll just look at it as an A wave, a B wave, and 1 and 2 and 3 and 4 and 5. So this is where it can finish at this point, wave 4 and wave 5 up here, and then start to make its way down, and you know, the party's over and we all need to go home, so to speak. You know, so that's the possibility on that side of the front there. You know. So we'll pick up that tomorrow, because we just spent time on the bull market side of things. And this is the NASDAQ here that we're using as the A wave, the B wave here. I mean, it's such a long move across here, but you have to remember that the S&P kind of had all of this here was a little bit more to the upside here, wasn't it? So if this is kind of interesting, because if the markets are going to be weaker and you know, and come on down through here, then it's going to be the NASDAQ that's going to lead. And there's a good case for that, because you know, when we look at if I may bring Amazon up for a moment, this move off the low here for Amazon here, this is in 3 waves here. So this would make a nice A, B wave here, and then 1 and 2 and 3 and 4 and 5 up here for this, and then come down here. Now I've got wave 3 and 4 here, but this could be 1 and 2 and 3 and 4 and 5 here. This wave 5 could come over here and it's finished. But I just think it's interesting pointing out that this here, you know, is in 3 waves here. So that makes it corrective. I don't think we've got a truncated 5th wave coming down here. This seems to be in 3 waves. That seems to be good as a B wave. So you know, we need to be, you know, we need to be careful about what we do over here. We need to be, you know, we need to look at both sides, you know, carefully, and see what we get. That's all. You know, I don't know what we're going to get, you know, at this point. I can see a good case for both sides. But yeah, so in this case here we get 1 and 2 and 3 and 4 and 5, and we're done, and we're coming down at that point. But otherwise it will climb up, and we'll look at this. We'll have to look at this as 1 here and 2 here and 3, 4 and 5 up here, just as we talked about before. So we just don't have any answers just yet. We just need to wait for this to play out, you know. And even if this does come down here, let's just say that the market comes down here and it happens really quickly. We get 1, 2, 3, 4, 5, and then it comes crashing down. It will come down in 5 waves, but at the same time, we'll also get a rally here as well. And the rally will help us look to the short side at that point, and we can build in, you know, going through here and, you know, through here, all our normal stuff that we do, you know, depending on where we are within the market. So yeah, that's it. So that's the plan. So just moving along a little bit, I won't go into the bigger picture. So this was the Russell here. It's just the ETF here that we were looking at yesterday, with 1, 2, 3, an A and a B and a C wave here, with 1 ABC for 2, 3, 4 and 5 here for wave 4, then 1, 2, 3, 4, 5. Now I know that we can count this down here differently, and I can look at this as going up for an ABC and failing at this point. You know, it will want to probably go a bit higher into this supply zone over here for that. But I could, you know, anyway, there's a case for looking at it with its low in place, but there's also a case for looking at this as an ABC coming back up and testing a little bit higher up here for this. So, and this is how this could play out here. So from the top here, we could look as wave 1 here, and 2 here, 1, 2, 3, 4, 5 for the third wave, the fourth wave here, the fifth wave here for 1 here, the A wave here, the B wave here, and the C wave up here. So also getting 5 waves up here. So I won't know yet. It doesn't really matter. We're just shooting the breeze a little bit and looking at both sides and treating them evenly until we do know what's going on, because we have to move with the evidence. And I'm not going to make a move based on, you know, some emotional sort of whim because I've seen the media or something, you know, or I've seen that really strong move there. You know, that doesn't mean, you know, I mean, that was a news thing, spike, you know, it can fade. But, you know, to give it credit, a nice strong move like that, you would think that, as I mentioned in the beginning of this video, or the other, the previous video on the stocks, is that, you know, the Feds will probably, they put it up half a basis point, 50 points, and in June they'll probably put it up another 50 and then another 50. I mean, you know, they got to kind of create a bit of a soft thing. But I don't think, you know, I don't think from, you know, looking at history, you know, the you know, in the 80s when they handled inflation, they put it up to 20%, didn't they? So it's not going to take any effect until there. But I'm more of a, is it Milton Keynes? Take on inflation. You know, it's got nothing to do with wages or putting up interest rates. It's just got to do with printing money. So I'm a bit on that side of the boat. But anyway, I'm not an economist, and even if I was, it just still wouldn't make much difference. So yeah, that's it, I think. So I'll leave it all at that. Thanks for tuning in. So we'll just wait. And we'll just wait and see. I think that's the best thing to do at this point. So we'll just chill. That's just the bank. So alrighty, thanks. Cheers.